Hi guys, welcome to today's post-market analysis video. This is the post-market analysis of the 18th of February 2022. That is the Friday. That is the last trading session we have had this week. So let's analyze price action here. Okay, we initially had marked this supply zone right here. You can see the supply zone here. We had marked this. That was coming from the 17th of February 2022. I had said that if price reaches there, don't take a long trade, because this level right here that we had marked was going to act as a strong resistance, the level being 17419. But we saw that day that price did not reach that level and it actually opened below the CPR. So what do we see here? Now we had marked a demand zone here. You can see that level, and you can see that level is the 17235.60. That was the previous day low also. So it was the demand zone as well as the previous day low at this level. Now you can see this particular candle formed a bearish pin bar, but can you actually call it a bearish pin bar? Let us zoom this in and see. See, it's not a very typical pin bar. It has the characteristics of a pin bar given the fact that it has a long wick on the bottom. But don't ignore the top wick here. This is also a very important wick. So this does not characterize as a classical doji. This one does not characterize as a classical doji, but it still is not a bullish pin bar. It has wicks on the top, and even the second candle has wicks on the top as well as on the bottom here. So the first and the second candle were kind of alike. For the ones who are new to trading, see, the open of this candle is here and the candle close is here. Okay, and this is the high that it makes. Let's write H here, and this is the low that it makes. Okay, so which means that sometime when the candle was being formed, sellers were trying to push the price down. Okay, and here after trying so much, you know that this being the demand zone from the previous day that we had already marked even before the market opened, then it shows price rejection with this kind of a pin bar. Okay, so sellers were trying to push price down outside the previous day's range, but since we had seen a jump in price the previous session, you can see this jump here. So because of this jump in the previous session, we know that it was a demand zone and price opened exactly at just above that zone. It opened here, and then at this level price was pushed down for a while by the sellers, but then they were unable to break the previous day's range and this particular candle here was formed. Now it is seen that whenever candles open around the PDL or outside the PDL, but then they close within the PDL, usually price will be attracted towards the CPR. So the CPR will act as a magnet and the price will go and reach the CPR. That is what is usually seen. But here there was no real indication that this candle was a very strong buying candle. In fact, that was no indication for me that price would actually go and touch the CPR because of this particular wick on the top here. I was not very confident about it. And again, you can see that this second candle also was not a very strong candle. The third candle was a strong bullish candle, and you can see this is a strong candle, but by that time price had already reached the bottom CPR. Okay, and from there it was a pretty volatile day. Actually, you could see that once price reached the top here, it came down, it was pushed again to the same level, then again here price made certain doji kind of candles, and then price was again pushed up in this area. Okay, so this was a fairly volatile market at that time, right? And you could see that price was just going around in this zone, and you could see how price was rejected at the central pivot also. Then price went ahead, got rejected at the top central pivot, then came down and then broke out of the top CPR also. Now the 1215 candle here broke out of the CPR. This was the breakout candle. That seems to be a fairly strong body candle. It broke out, but that was still not a breakout entry. Okay, that was not a breakout entry. I'll show you why. See, that was the 12:15 p.m. candle in Nifty. And now look at Bank Nifty. Bank Nifty had a wider CPR than Nifty had. What did it suggest? That there was not much chance of a breakout pattern yesterday. So this was not a kind of day where you should be looking for breakout patterns, rather you should be looking for reversal kind of patterns. And 12:15 p.m. was the candle that actually showed us the breakout in Nifty, but at that time the 12:15 candle, which is right here, it was still within the CPR in Bank Nifty. So whenever such kind of a breakout happens, most often such breakouts will fail because Bank Nifty might get rejected at the CPR and it might fall from there. Okay, now going back to Nifty, we can see that price broke out of that range. You can see how price broke out from that range here, then from here it corrected, and from here it went up to here, and then it was again rejected, and then it took a rejection and a major fall from here. And if you see that within those 15 minutes price had fallen nearly 90 points, and again it kept falling and it went down and made a low to around 103 points. You can see this 1 2 3 4 5 and 6, and here this is the 7th red candle and the 8th candle here. So within 8 candles, that means 40 minutes, it fell nearly 100 points within just 40 minutes. So that was a sharp fall from there. And if you were to consider the fall from the high that it made, it was nearly more than 130 points that happened after the 12:50 p.m. candle right up to the 14:45, that is a 2:45 p.m. candle. So you can see the kind of fall that Nifty took, and we're talking about intraday levels. So Nifty easily makes more than 100-point move these days. That is how volatile markets intraday are. Okay, now let me explain the trade that I had taken in the previous session. You can see strong green candles from here. What does this suggest to you? You can see here also there was a bounce here. What does this suggest? That there is buying coming from the bottom. Okay, but that level is below the CPR. You can see this price action. In spite of this buying from here, price was rejected. What should be your reaction here as a price action trader? You know that this is a strong resistance, because in spite of strong green candles, it still does not let price go above that level. Okay, and you can see that the CPR is also there, and it is an average kind of CPR. So here I was of the impression that when price reaches the top of this particular candle, or it reaches the central pivot, and if it does not break out and makes a bearish kind of a pattern, I will short there. Okay, and that would be a very favorite pattern of many traders that I have previously talked about also. If you have not, please go and check my analysis videos in the past. I have described this pattern. It is the double top pattern, which happens frequently intraday, and I really love to follow that pattern on the 5-minute time frame. And how is your entry in that pattern? You have to mark out the high of that particular day whenever price gave a sharp rejection and fell. So you can see that price had fallen sharply from this place. So I knew that PDL was a strong support. Let me mark the support here. See, the PDL becomes a strong support, and usually price action shows us that whenever price opens at a strong support, takes resistance at a strong resistance like the central pivot, falls and goes back to that zone again, you can see that there is a double top pattern here, and exactly that is what I saw on the 18th. So you can see that this particular candle, which was the 11:15 a.m. candle, was a double top pattern. See, you can see the strong wick on the top, it shows rejection, and then the follow-up candle also is a red candle. So I had seen that, and so as you can see from the order book, I placed a short order in Nifty in the 17,300 call option, and I sold that option at 210 rupees. That was at 11:22. So 11:22 meaning in this particular candle I had traded after completion of the 11:15 candle, which was this candle. So when I saw bearishness in the second candle also, I took that trade, and my SL was up here. Okay, my SL was somewhere up here above the CPR, and I had taken entry in this particular candle, and I had planned to take my profit back at the previous swing low. Now what is the previous swing low? It is this particular line from where price had previously bounced. So as you can see, this was my target and this was my SL. So this was the SL with which I was targeting the trade. Okay, so let's call this my target right here. So you can see this is easily a 1:2 risk reward, and hence I was planning to take a profit back to the previous swing low, but that was not to be. And as you can see at 12:10 p.m, which you can see here, this in this candle, my SL was taken out because this candle broke out of the CPR. I'm talking about this 12:10 p.m candle. Okay, so I'm talking about this particular candle here. So this candle broke out of the CPR and it took my SL. So that is fine. So that is how you should be trading. That is how your trade plan should be. You should look out for a 1:2 risk reward and then place your SL safely and then play by the rules. Don't break your rules. It is most important to play by your rules, and you should not break any of your rules. It does not matter what happens. Don't keep hoping and don't keep praying that price will come and it will reverse again. The moment I saw that CPR was broken, my SL was taken out, and that was where I exited my trade. So that is how you should mechanically trade. You should not have emotions. You should not think that, oh, now my SL is being hit, the price is coming closer to my SL, so let me just take it further up so that price will get rejected from the top and it will fall again. Hope is the most dangerous and the most devastating emotion in trading. So be very mechanical and trade like a machine. Okay, so let's go forward and mark a few levels for Nifty here. Now you can see here that this was a level that we had marked, and you can see this candle wick here. So initially this wick was taking support here, and then the second wick was also taking support here. So there was a push of price from the previous day low towards the CPR, then it fell again, then it again took support and it bounced. But then at this level it took rejection and it fell almost to the same level where it had opened. The open is 17241.80 and the low of this 2:45 p.m candle is 17246.40. You can see this on the top. So it's almost the same, just about 5 points difference between the two. So it made a low of right up to the open of the first green candle, the first 5-minute opening candle. So you know now again that you should not be marking any other levels but the demand zone right from this level here up to the PDL, that is the PDL, that is the low that price made on the on Friday, that is the 18th of February. So you can mark this level as the demand zone, and you obviously need to mark the supply zone here. So this level, the PDL, will be the supply zone. You can mark this area like this. You can take these wicks into consideration. You can take this wick into consideration because price could not break that level. It tried to. You can see this pin bar. I'll just zoom it up for you. See, this was the wick I was talking about. This is the 110 candle. Okay, just check out this candle here. This is a 1:10 p.m candle. I'm talking about this particular candle here. So you can see this, it's a strong pin bar, though green in color, but it shows price rejection. Okay, so that is the level I'm talking about here. So it actually made a green candle right up to the high of this candle, that is at this point, and then it was rejected. So that was a strong rejection. And you can also see that it has made an engulfing pattern here. Now if you have not studied candlestick patterns, please go ahead and read about them. Price action is the most important in trading, so forget about all those indicators, start learning price action. This is a kind of pattern which is called an engulfing pattern. Okay, and when the low of this candle is broken here, see the low, when it was broken, it was evident that price was going to turn, it was going to fall from there. So this is a reversal candlestick pattern. Okay, so price was pushed from this level up to this level, Then this resistance here, there was resistance here and sellers came strongly back, and again they pushed the price from this level to the bottom here to the low of the 2:45 p.m. candle. So that gives us the demand zone for 21st of February 2022, and we can see here that there is a level here that was respected many times. So we will go ahead and consider this level also. We can take the low of this red candle into consideration and mark it. The level is roughly around 17256.15. Okay, you can take that level into consideration. You can put a box around it, of course, but ensure that you keep an eye out on that level. See, why I have marked that level is because you can see price action at this point here. You can see price action at this point here. You can see price action at this point here. Okay, so everywhere, whenever price comes to that level, you can see that there is some sort of bullishness that is seen at that level. Okay, you can see that price does not find it easy to break that level at all till the entire session is over. In fact, it does not break it for the entire session. So every time price, see, from here price went up to here, then it was rejected, it again went to the level and rejected, again went up, and then a massive fall, and again here it was rejected. So keep that level in mind. Now that level will be important, particularly on 21st, because that level has been retested how many? 1, 2 and 3 times. The more number of retests, yes, the level is more important, but if price opens somewhere below that level here, this level may act as a strong resistance now, it being a prior demand zone. So it might just push the price down from here. So we will see. It all depends on how markets open, but that is how the level is important. I'm not saying that price will bounce from that level absolutely on 21st of February. I don't know that, but it is our job to keep important levels given to us by the markets on the charts ready even before the day opens. Now let's check out Bank Nifty. Right, so this is Bank Nifty for you, and we can see here we had marked this area out here, the day high, that is the previous day high, which was within the CPR as a strong supply zone, and we had also marked this area. But now you can see that on the 18th, price just did not reach that level. Instead, it fell even before reaching that level. So their price was rejected, and see, now we had marked this area. Okay, this area was the demand zone here. I had said that this area is a demand zone. So now whenever price comes to that area, there will be some action around that area. It acted as a strong resistance for these candles here. Right, so that suggests that there is some price rejection at that level. So that level was important for us. And then let's take a look at how price reacted to that level on the 18th of February. So see, again, look at the population of those candles within that area. How much time price took to actually break out of that area. See, price kept bouncing. You should learn to read price action like that. Within that same area, it was stuck between this zone, wasn't it? It was stuck here. And that is how price tends to range within a particular price limit. The price neither breaks that on the upside nor on the downside, and there you get to know that there is a fierce battle going on between the buyers and sellers, and this line happens to be the median here. See, it's right in between that zone. So that is exactly how you should be analyzing price action. You should not trade within that zone. Okay, and as I had said in Nifty, I had told you that the first candle in Nifty was neither bullish nor bearish, but it had a strong wick on the bottom and it had a strong body also. So the top wick could have been ignored, but considering Bank Nifty, you could see that there was a classical doji in Bank Nifty. So again, you see that buyers and sellers are not exactly ready to push the price in one particular direction. But then Bank Nifty made this candlestick. That was the second candlestick. And as I had said in the Nifty analysis, that in Nifty, the second candlestick also was a doji. This one was a kind of an average Marubozu candle. And then it was pretty evident that price would be pushed straight to the CPR. CPR will act as a magnet there. See, the PDL is a very strong resistance to price when price opens outside it, and once that resistance is broken, it becomes a support. Okay, so you know that now once the price has broken out into the previous day's range, okay, then you know that this kind of a candle here, it suggests that it is a strong bullish pattern, and it is a good idea to go long on that candle because you know that it is a breakout candle. Okay, so that is a good idea, but then the problem here is risk reward. So your RR, as I've always said in every video, should be a minimum of 1:2, and beginners must remember this. RR is very important. You must have an RR of 1:2. So moving ahead, when price went up to this area, it was rejected, and then this area acted as a support. So you can see that this was a support. Okay, price was taking support. It took support around this area also here. You can check this out. And then this particular green candle was formed, again suggesting that price was going upwards. And then it traded for a long time within the CPR. See, up to this point it traded within the CPR. You can see that price had actually broken out of CPR with the 12:45 PM candle. So this was the 12:45 PM candle, okay, and the 12:45 PM candle was breaking out of the CPR, and Nifty was already out of the CPR. This is not a very strong candle to trade on. Not very wide, but it was a wide CPR, not suggesting of a breakout. So again, you can see here that price was not indicating that there would be a breakout. And again, you can see the wick on the top here. See, this was a wick on the top. Usually when you see breakout candles, you should see something like this, okay, or even this is a good breakout candle, okay, but this candle was not suggestive of a very strong breakout. I'll just zoom it for you. See, you can see that the wick on the top and the body, it doesn't suggest it's a very strong candle, so no point taking a breakout trade at that point. Now let's go and check out the levels depending on this price action of 18th February 2022. Okay, first things, we can observe that we have a very narrow CPR on for the 21st of February, right? A very narrow CPR. So likely indication is that there might be a trending day, but we'll have to see. Don't go into the market with a bias. Okay, as of this price action, we can see that the day low will act as a demand zone now. So let's just mark the day low here, although we have this marking, but I'm just marking it for you in case you don't have the indicator, you're not using this particular indicator which shows you the next day pivots also. And this is the day high, the previous day high, which will act as a not a very strong supply zone, but yes, price was definitely rejected at this place. You can see these wicks here in this box, so a very strong price rejection in that area. So you could actually go ahead and put all these in the box also. Whatever your eyes see, you should follow in trading, and that is how you should mark levels. Rest of the levels we already have all of them marked. You can just extend these levels now. We have seen that there is a supply zone coming from the 17th of February. We're just extending that level, and we are also extending this level. We'll see what kind of price action we see on that particular time when price reaches that level. There is a supply zone coming from 16th of February also, and we will see how to mark levels below it. So this is the demand zone. This will also be extended. This is coming from the 15th of February, and this demand zone is coming from the January 25th 2022. I'll update these on the Twitter also, so you can mark them down on your charts. So that was the price action analysis for the 18th of February, and the important levels, please pick them up from Twitter. And I hope you saw how my SL was taken today and how I took my SL, and it does not affect me at all, because I know that the day I win, I will win big, and I am a trader who believes in CPR and believes in the system. So I know that my system will not exceed every day, and it will not even fail every day. So I know that if I maintain a risk reward of 1:2, I will definitely continue being a successful trader. I hope you like this video. If you have, please hit the like button and also subscribe and hit the bell icon so you're notified each time I post a new video. And please leave your comments in the comment box below and tell me how you're liking these EOD videos and if they are helping you. Have a great Sunday. I'll see you in the next one, guys. Thank you and bye bye.